Good morning, everyone. You are watching a live daily market outlook for Thursday, 15th of March 2012, prepared by Windsor Brokers. Markets during the Asian session have entered the corrective mode after strong gains seen on dollar that hit a fresh high against yen at 84.17, while euro dollar dipped to 130.00, and the cable remains still under pressure as upside attempts remain capped by main trend line and the 157.45 previous highs. The dollar Swiss is in its short-term uptrend, currently in the downside corrective action, as gold also came under pressure, increased pressure, hitting fresh lows yesterday at 1634, but inching higher during the Asian session towards 1650 zone. The oil is also slightly higher during the overnight session after hitting a fresh low yesterday at 105.11. The Asian shares eased during the session on renewed concerns about Chinese growth, but the brighter global economic outlook underpinned the US dollar and kept investors' risk appetite intact, reducing the appeal for safe haven government debts. The firmer dollar hurt basically dollar-based commodities such as gold as well as industrial metals, including copper. As mentioned earlier, the gold is still under heavy pressure, and the series of fresh lows seen in the past few days. Also with China, the Premier Wen Jiabao said yesterday that China must embrace slower growth and bolder political reform to keep its economy from faltering. He also dampened hopes for any near-term easing measures in the country's property sector, sending Chinese shares lower that remained weak during the Asian session today, after falling sharply the day before the Wen's comments. From Switzerland, early this morning, government announcement said that the government raised its 2012 growth forecast a touch, saying with the Eurozone debt crisis easing, there was a good chance the economy had put the worst behind it. The Swiss National Bank, which capped the soaring franc at 120 per euro on September 6, 2011, to ward off deflation and recession, is due to announce its quarterly decision on monetary policy in some 20 minutes at 8:30 GMT. Signs of economic momentum gaining force reduce the likelihood of its trying to shift the cap higher, despite calls from left-wing politicians and trade unions to help the struggling tourism industry and exporters. Switzerland's State Secretariat for Economics now sees a growth of 0.8% for 2012, up from December's forecast of 0.5%. It's announced on its announcement today, adding that leading economic data since the start of the year had shown initial signs of stabilization among both businesses and consumers, with the Swiss franc still some 30% stronger than when the financial crisis hit in 2008. The SECO revised its 2012 inflation forecast down a notch to minus 0.4% from minus 0.3%. In 2013, it sees prices rising 0.4%, up from its December's view of 0.3%. From UK, the Fitch rating revised down its outlook on Britain's AAA rating to negative yesterday, warning the nation faced a greater than 1 in 2 chance of losing its top-notch status in the next couple of years if the government eases back on its debt-cutting measures. The Fitch action, which comes just a week before British Finance Minister George Osborne presents his annual budget to Parliament and follows a similar move by Moody's just a month ago, is likely to dampen calls for the government to soften its stance on austerity. Fitch for now affirmed Britain's AAA status, but said that a downgrade could be triggered by discretionary fiscal easing that resulted in government debt peaking later and higher than currently forecast. From today's calendar, already issued from Australia, the new motor vehicle sales showed no change at 0.0% compared to 2.2% forecast and plus 1.2% of the previous month. As mentioned, the Swiss National Bank Libor rate are due at 8:30 GMT, no changes at 0 to 0.25% for today. And following is the monetary policy assessment comment of the central bank after the rate announcement. From Eurozone at 10 o'clock GMT and employment change quarterly release. Minus 0.2% is forecast for today compared to minus 0.1% of the previous quarter. America's start at 12:30 GMT with the US monthly PPI due at 12:30, 0.5%. Today's forecast higher than the previous month, 0.1%. Weekly jobless claims from US at the same time. A slight decrease in the claims, 357,000 is forecast for today versus the previous week, 362,000. U.S. Empire State Manufacturing Index is expected to slightly decrease, 17.6 is today's consensus compared to 19.5 of the previous month, and at 1400 GMT Philadelphia Fed Manufacturing Index improvement to 11.9 is seen for today compared to 10.2 of the previous month release. Now quick look in the markets and the technical outlook for the majors and commodities. Euro, as shown on the 4-hour chart, remains in steady downtrend of 134.85 with the latest price action. Significant was a break below 55 days moving average at 130.80, as well as a break below the Ichimoku cloud base at 130.50 that significantly weakens the structure. The pair has so far tested our target and the psychological support at 130.00, the low hit during the Asian session, ahead of a mild correction higher. 130.50 was initial target that was briefly dented to 130.65, where hourly 55 days exponential moving average so far capped the upside, and as studies are already, hourly studies already in the negative territory, no signs of stronger correction at this point, already started pointing lower. Main target remains at 129.73, low of 16th of February 2012, and the loss of initial support at 130.00 is to open way for test of this level. Just below this is 61.8% Fibonacci retracement standing at 129.52. It's the reversal of the broader uptrend from 126.22 mid-January low up to 134.85, and a break basically below these two levels is expected to further weaken the pair's price and possibly open way for test of levels at 128.75, which is the next static support. Also to refocus levels at 126.20 in the short term, as the pair lost all relevant supports, with the last remaining at 129.73 and Fibonacci level at 129.52 to confirm further weakness after the upside was firmly capped at 134.85 end of February double top, and since then the pair is in steady descent. The British pound, after an initial bounce of 156 low where the temporary base was found. The gains remained capped at 157.45 with further extension mainly sideways, but still turn towards the downside as most of the studies are pointing lower, and the price holds below 20 and 55 days moving averages for now, with the main bear trend line drawn of 159.91 currently at 157.14, capping the upside for now. As said, the near-term studies remain negative and keep the focus the downside. A brief break below 156.50, that was the previous very strong support, as the pair extended overnight to 156.35, keeps the downside in focus, with next level at 156.20 ahead of 156.00, a break of which to open way for a further extension lower towards 155.23 Fibonacci level, 61.8% of the uptrend from 152.33 mid-January low up to 159.91 end of February peak. The structure on the daily chart is now losing steam, running out of steam as the studies broke below their midlines, keeping the downside in focus, as well as a loss of the very strong support at 156.50. That was the higher platform of mid-February. Further weakens the structure. At this point, only regain of 158.00, 158.30 would improve the near-term structure. However, break above 158.67, where is 200 days moving average that caps the price action from September 2011, break of which only would refocus levels at 159.90, 160.00. Until then, the downside remains firmly in focus, and as near-term price action is capped by 157.14, 157.45. Dollar yen extended its very strong rally of 76.00 base, posting a fresh high overnight at 84.17. This is the fresh high after breaking our initial target at 84.00. Hourly studies hit their extreme levels, and this triggered actually this pullback that so far tested 83.50, our initial static support. The overall tone on the larger time frame remains firmly bearish, despite all studies being in the hitting their extreme levels, still pointing higher, and yet no signal of any stronger reversal. The euphoria of buying dollar against yen continues as investors are looking for a pause in this strong rally, like its current correction, in order to see better prices for jumping in. At this point, 82.63 and 82.00 offer very strong support, and I would say only break below these levels would significantly weaken the structure. There is also 55 days moving average at 82.00, and basically only break below this level would signal some stronger correction of the current very strong rally from 76.00 base that peaked at 84.17 so far. On the upside, 84.50 is the next static resistance ahead of 85.27, 85.50, a very strong resistance zone. We have 50% retracement of the 2010 to 2011 record low down leg. Also, there is a peak of 2011 at 85.51, as well as weekly 150 days moving average at 85.55. This is our short-term target for dollar yen, and if the pair continues moving this way, this is going to be a very likely scenario in the very short-term period of time, testing our main target at 85.30, 85.50 zone. The dollar Swiss also extends its short-term recovery of 89.30 double bottom, as the latest price action seen yesterday broke above our initial and actually the key short-term barrier at 93.00, extending so far to 93.33, which is just ahead of 61.8% Fibonacci retracement of the down move from 95.93 down to 89.30. That currently stands at 93.39. Studies on the daily chart are breaking above their midlines, suggesting a further extension higher, as break of the last Fibonacci barrier at 61.8 is to open higher levels. 93.70, 93.76 is the next static support, resistance ahead of 94.00, which comes next, and it's a previous low and also the round figure resistance, above which to open way towards 95 and 95.90 previous highs. Back to the lower time frames, the current pullback is seen corrective with the 92.65 seen so far. Next support is at 92.50. Actually, it's the initial support that the current reversal held short of ahead of what is also the 55 days exponential moving average. And this is actually offering a good support, as a temporary footstep was found here. A regain of 93.00 is to refocus upside levels at 93.33.39 and resume the current uptrend. On the downside, I would say loss of 92.00 would be risky for the current positive structure, as this will allow for a stronger reversal, possibly towards 91.38, higher low of 13th of March 2012. From the commodities, brief look at gold shows that the yellow metal is in a steep downtrend after a upside rejection at 17.16, just ahead of 17.25, our initial resistance, with some base found at 16.34, which is between 50 and 61.8% of retracement of the broader uptrend from 15.22 to 17.90. The daily structure is firmly bearish after the pair broke below 200 days moving average, as well as main bull trend line, keeping the downside in focus, as current bounce is seen corrective for now, with the initial resistance at 1663 previous low, where is also close to it is the 20 days exponential moving average, currently standing at 1668, and basically this zone is expected to contain the upside corrective action towards the upside. At this point, only regain of 1700 price would ease the current bear pressure and keep hopes of possible retest of 1716, 1725 in play. Otherwise, downside remains firmly in focus, with next Fibonacci target at 1625, and further down 1604 is the next static support, also close to 1600 psychological support. This loss of these levels and further extension lower threatens of further easing of the gold after it hit its record high at $1,920 per ounce on the beginning of September 2011, and since then it remains in the steady descent. For now, this very strong support is seen at 1522, 1532 double bottom, and basically break of this level is required to open way for more significant reversal of the long-term uptrend that started sometime in 2001, 2002, from the levels of approximately $250, $300 per ounce that peaked at $1,920 per ounce in September 2011. A quick look at crude oil. Also, the price action remains in the sideways movement, but the outlook is still turned towards the downside, as upside attempts failed to regain the initial barrier at 108.20, and the loss of some supports and range floors at 106.50 and 105.66 and 105.37. So far tested the 105.11, keeping the focus more to the downside. On the upside, break above 106.30.40, where are the 20 and the 55 exponential moving averages, as well as static resistance at 107 and 107.33 is required to improve the current structure. However, the current movements of 110.53 recent peak are still in the sideways movements, and the only loss on the downside, loss of 104.34, is to open way for further easing of recent highs, while the regain of minimum 107.33 and break above 108.20 is required to turn the focus higher. I wish you a nice and successful day.